Robert Kiyosaki, a renowned guru in finance, issued a warning in the wake of the failure of Silicon Valley Bank that a central bank of a global powerhouse may be the next financial institution to fail. According to Kiyosaki's explanation, the greatest bank that is going to fall down is the Bank of Japan. Because the Bank of Japan carried the interest rates at, 0 or whatever they did and financed the derivatives markets. And the derivatives market, as Warren Buffett said about derivatives, they're weapons of mass financial destruction. And the derivatives market in the world today, financed by the Bank of Japan, is $1 quadrillion.
But the biggest bank that's going to go down is the Bank of Japan. Because the Bank of Japan, carrying the interest rates at, 0 or whatever they did, financed the derivatives markets. And the derivatives market, as what Warren Buffett said about derivatives, they're weapons of mass financial destruction. And the derivatives market in the world today, financed by the Bank of Japan, is $1 quadrillion.
The author of Rich Dad, Poor Dad made these remarks at a time when the market is experiencing what some analysts are calling a rally. This terminology was given by analysts after the market saw yet another successful day in March. Kiyosaki, on the other hand, cast doubt on the viability of a recovery by pointing out problems with the derivative markets. Moreover, he cautioned that the extensive links between the Bank of Japan and derivative markets put the institution in a more precarious position and posed a bigger risk to the economy of the entire world. Cavuto questioned Kiyosaki on the reasoning behind such doomful call. But we haven't seen the crisis coming yet, he added, because the Bank of Japan has been funding derivatives. Derivatives are $1 quadrillion. That's 1,000 trillion. But we haven't seen the crisis coming yet, he added, because the Bank of Japan has been funding derivatives. Derivatives are $1 quadrillion. That's 1,000 trillion. In addition to the problem with derivative markets, the legendary figure in finance voiced his disapproval of money printing practices as well as the Federal Reserve's aggressive policy on rate hikes. Cavuto questioned by asking, "What do you see occurring? You obviously aren't buying the rebound and that the market are stabilizing." Since 2008, interest rates have been dropping, and all of a sudden the interest rates are going up. Federal Reserve Chair Powell has raised interest rates faster than any other time in history. So somebody says, well, he's playing Volcker. Well, former Fed Chair Paul Volcker raised interest rates over years and Powell is doing it over months, Kiyosaki said.
No, and this, but people for years, since 2008, interest rates have been dropping, and all of a sudden the interest rates are going up. Powell has raised interest rates faster than any time in history. So somebody says, well, he's playing Volcker. Well, Volcker raised interest rates over years. Powell's doing it over months.
Kiyosaki argued against time-tested counsel about the Fed in light of the Fed's more fast rate rises. I would stay with gold and silver. I've been Chicken Little or Paul Revere for all these years, but I'd still rather have gold than this stuff, Kiyosaki said in the Thursday segment, pointing to a piece of paper currency. This idea of don't fight the Fed and all that, I think that's old advice. I would stay with gold and silver.
This idea of don't fight the Fed and all that, I think that's old advice. I would stay with gold and silver. This little 64 Kennedy half dollar is worth $10 today because it's real silver. And that's what I've been saying for years. You've allowed me to say it. I've been Chicken Little or Paul Revere for all these years, but I'd still rather have gold than this stuff.
The specialist in the business did not stop with his warning about an impending bank collapse. Instead, he added that the ramifications may provide China another way to impose its domination over the rest of the world. According to Kiyosaki, Jim Rickards summed it up the best when he referred to the situation as a currency war. He continued by saying, China is coming after us. In the 1940s, the United States dollar was designated as the reserve currency for the global economy. In recent decades, however, China has made strides to displace the dollar as the world's primary reserve currency and replace it with the yuan. Their expanding influence, as a result of initiatives such as the Belt and Road Initiative, has only succeeded in winning over more supporters for the communist country. Kiyosaki was quoted as saying, "The problem with Americans is that we live in a fishbowl. We can't see how everybody can see. And right now, the BRICS, which includes Brazil, Russia, India, China, South Africa, and Saudi Arabia, they're going to shift to the Chinese gold yuan, and that's going to send trillions of US dollars back to us.
Well, the problem with Americans is, we live in a fishbowl. We can't see out. Everybody can see in. And right now, the BRICS, Brazil, Russia, India, China, South Africa, Saudi Arabia, they're going to shift to the Chinese gold yuan. And that's going to send trillions of these things back to us. Triffin's dilemma was we had to put all of this money out there with the petrodollar so they could buy oil and something like this. But China's coming after us, man. China's coming after us. Jim Rickards said it best. He calls it a currency war. A currency war. And so that's why I'm very concerned, and I appreciate always the time you give me to be Chicken Little or Paul Revere.
Kiyosaki cautioned that these variables are already generating tremors in the global economy, and that investors should be on watch for the potential fallout. He compared the economy to a fault line. He explained, the San Andreas Fault is still there, and if that happens, California would tumble into the ocean. The San Andreas Fault is still there. But if I had to choose right now, I'd much rather not live on the San Andreas Fault, was all that he said.
Well, it takes a while for an Earth. The San Andreas Fault still sits there.
True.
Which will mean California falls into the ocean if that happens. But I'd rather not live on the San Andreas Fault right now. That's all I'm saying.